With the real estate market shifting, I'm seeing more and more people trying to buy homes to become landlords, but they're missing out on long-term gains because they're so fixated on the short-term numbers, and they're, like I said, they're costing themselves a lot of money down the road. Let's talk about that. Like I said in the beginning of the video, the market is shifting, and people are wanting to buy up properties to become landlords. One of the biggest things I see some of these landlords, these potential landlords are doing is they're ignoring the long-term gains. They have this philosophy that if I can't rent it out for a 50% profit, I don't want to touch it. And ignoring the fact that best way to describe it is that when you're a landlord, it is a long-term play. It's not like flipping a home. You don't get that instant 25-30% gain when the house sells. This is something for someone who's in the long term. Like I said, reason I know this is I watched my grandfather, who was a real estate investor. He had multiple homes that he was renting out, and I get it. Times are different. From when he would buy homes wherever he was stationed in the Army, and then when he got deployed somewhere else, he was renting it to somebody on base. But he knew that in the long term, this was going to pay for it. And this is for a man who didn't graduate high school, and his retirement was funded comfortably. Just going to keep that in mind. He had multiple homes in different states that just funded his retirement. Again, he thought long term. Now, I get it. When you're renting a home out, obviously what you can rent it for compared to what the monthly expenses are going to play a big role, especially if you're financing the home that you're renting out. But there are so many more ways that you can make money as a landlord that you have to keep in mind. Now, the first way a landlord makes money is going to be the most obvious. It's going to be the rental income. Obviously, how much could you rent it for versus how much it's going to cost? It's got to make sense, but there's so much more to this. A second way is that you make money with rental properties is going to be the appreciation of the home. Yeah, there's an ebb and flow. Homes are going to go up in value. They're going to drop. Markets shift. But in the long term, real estate keeps going up in value. So in 20 years, you might have gained 30, 40, 50% equity just by holding onto the property. And that's just something a lot of landlords don't keep in mind. Again, long term. This is something to potentially build generational wealth, maybe in a sense, or something that my friend Kevin has multiple properties that's funding his retirement, and he knows that when he passes away, these houses are bringing enough revenue that when they sell, that when he passes away and they're going to be sold, none of his grandkids have to worry about paying for college. Just think about that. Again, long-term planning. Now, a third way that you make money with a rental property is going to be if you're financing the home, the rent is covering most, all, or hopefully enough where you're walking away with some extra money in your pocket. It's covering your mortgage payment. It's also covering the taxes. It could be covering the insurance, and that's money that's not coming out of your pocket, and those bills are still being taken care of. So you're building the equity into the payment. The loan's being paid down. I have a friend who had a condo in Annandale, and when she got married, her husband got deployed to another part of the country. He was in the Navy. They were initially thinking of selling the condo to take the equity to buy the new place, but I convinced them, don't do it just yet. Don't do it just yet. I'll help you find the tenants, but you're making a little bit of money each month. Keep renting it out. And for the next 10 years, she's renting it out. The mortgage is going down. She did do a refinance to take advantage of a better rate when things had changed, but rates had dropped at that time. But the value of the home was slowly going up, and the payoff was slowly going down. That like I said, after about 10 years, when they were ready to retire and they wanted to buy their dream home, they had a stronger Yeah, they had a stronger amount of, they could use for the down payment for their dream home to retire in because they held onto this rental property. So if you're financing a rental property, you're making money when you collect rent and they're paying your mortgage. That's something you also got to keep up with. Again, long-term gains. Now, the fourth way you can make money as a landlord, and this is just something people also forget about, is it's going to be the tax write-offs. There are things you can write off. Whether again, talk to your CPA, talk to your tax preparer. But the things you could write off can help you get more money in your pocket when you can keep more money in your pocket during tax season. That's just something to keep in mind. So updates, repairs, depreciation, taxes, things you could write off and put back in your pocket, or at least keep in your pocket, I should say, as well. Now, the fifth way you could make money as a landlord. Now, this one's going to depend on what kind of property you have. Now, this is something, if you have a multi-unit property, you can make money doing this. You could charge, let's say you have an 8-unit building. My brother owned a 4-unit building, and there were certain things he could have done. He could have charged for parking. For sake of argument, you could get one parking spot. If you need a second or third spot, that's going to cost you extra per month. I've seen some landlords do this with multi-unit buildings. They put in washers and dryers that require money. Little things like that. I saw some units, somebody who had a 20-unit building that had a pool that he charged for pool passes. Reasonable. He was charging like $15 for the season, but that was just a little bit extra revenue coming in to help cover expenses. So you get the idea. If you have a multi-unit building, you could charge smaller things for some stuff. You could charge for some stuff, I should say, to build a little bit of revenue in there as well. By the way, I'm being a little bit rude. Let me introduce myself a little bit, tell you a little bit about myself. My name is Will Bowers. I'm a licensed realtor with Allison James Estates and Homes. I'm licensed in Northern Virginia, but this is information you could use anywhere in the country. And just adjust my camera. I recently got a new cat that's kind of just lingering behind her, and she's wanting to play with stuff. So, but also my grandfather, like I mentioned, was a real estate investor. He had multiple properties he rented out. He had I want to say 8 or 10 unit property that was not far from down the street from where he lived. And I spent a lot of summers with him, and I just learned certain things from him. Now, the reason I'm doing real estate on this end as opposed to doing real estate, I also do real estate investment. The reason I'm also a licensed realtor, this is a lot of fun helping people buy and sell homes as well. So, make money and feed the soul. But anyways, so another the reason you're here is I'm odd, Trixie. Leave the camera alone. She's so cute. My new cat's so cute. Neighbor couldn't take care of her anymore, and I said I'll take her. Another way you can build value in your home, if you're renting for your rental property. And now this one's going to actually cost you a little bit of money. But if you start putting in features that people like, you could start charging higher in the rent. In certain parts of the country, electric vehicles are high in demand. So if you can get an EV charger, you can charge more, as in money and in the car. Smart features, you definitely can do that. That's another way to build a little bit of extra equity, build a little bit of extra increase in the rent. So just see what the market in your area is saying, and sometimes you might have to do a little bit of updates. You may not necessarily, maybe it's wiser to go with an EV charger than it is with certain floor upgrades. Just look at your market. Now, another way I've seen people make money, and this one you can make a substantial amount of money, but you have to be wise on it. You also have to understand the rules and the regulations within the county and sometimes or the state or associations. I've seen people make money doing short-term rentals. In the house I grew up in Michigan, my aunt got it after my grandparents passed away. My aunt inherited, and she turned it during the summer. This was a beach community, so during the summer it was an Airbnb, and then in the winter months, which in West Michigan, so basically for 4 months she had it as an Airbnb and a Verbo, and then for about 8 months she had a deal with several different companies, so they were bringing in employees So they could have some short-termish, long-termish, 6, 7, 8 months, they could have housing. So that's another thing you could do, is if you could find an organization that you could say, I can provide housing for your people 6 months, 7 months, depending on your location. Airbnb and Vrbo, depends on the certain county restrictions. Fairfax County, Virginia restricts it to a certain number. I want to say about 30 days a year you can use a property for Airbnb, but the city of Alexandria, right next to Fairfax County, doesn't have those restrictions on the number of days. It just honestly just comes down to licensing and tax purposes. But also association rules. Most condo associations don't allow short-term rentals. They might say you could do a 3-month rental, which means you could make connections with different companies. There's areas where there's a lot of traveling nurses or companies that have a lot of traveling technicians, people in the IT industry, you depending on the different industry. So that's another way you could also make money doing real estate. You may not have to go with the long-term 12-month lease. Now, before I go, there are 2 more things I do want to mention that landlords also ignore. One, sometimes you might make more if you rent it out by the room. I have a friend who he bought a 3-bedroom house as his first house, and he rented out one of the bedrooms. He kept the second bedroom as kind of a guest room. It was also a hangout for his Transformer collection. I'll be upfront about that. But he rented out one of the bedrooms and split the utility costs with them. And that, it didn't pay all the mortgage in his situation, but it paid a decent chunk of the mortgage that allowed him to put more money aside so he could do, what he wanted to do, he wanted to do some upgrades. So he took the rent, put it aside, and let the money accumulate. So it was time to do some remodeling. He had a little extra cash ready to spend. But I've also saw another friend who, on his first house, he bought a 4-bedroom and he rented out 2 of the bedrooms, and that covered almost all his mortgage. So he was just, when he lost his job, he didn't have to worry about getting his mortgage paid. He was able to survive. So that's another way. Another thing I see landlords do on making money is also Section 8 housing. Now, granted, some things could be changing with the current administration, with current rules, different states, different counties. But with Section 8 housing, it is guaranteed money. We all know that there is a certain belief that Section 8 housing could be high risk, but you could make a lot of money. I know some landlords that deal with they will only do Section 8 housing, or that's their primary target that they prefer to go for, because they know the rent's going to be paid every month. And then that's just allowing them to build a little bit of equity in there. Again, these are just food for thought. If you have any questions, please, my information's down below. But also, any comments, any topics you want me to talk about in the future, would love to hear what you have to say. Thanks again. Also, for my fragile ego, if you could comment, subscribe, like the video, would definitely help. My girlfriend says my ego has to be inflated all the time. She says it's a Leo thing. But anyways, thanks again for watching, and I'll see you in the next video.